Hello everyone, welcome back to Unday Radar Talks. Intuitive Machines stock surged 38% on Wednesday. The intraday high was 64%, but the stock price lost nearly 30% of its gains at the close, which caused most of the trading on that day to occur above the closing price. This situation does not seem good. Data shows that the stock had a net capital outflow of $15.5 million on September 18th, while the net capital outflow on the previous trading day was $6.7 million. But the trading volume on that day was significantly higher than the previous trading day, which reflects that due to the surge in the stock price that day, the capital inflow and outflow of the market on that day increased significantly. But the proportion of funds flowing out of the market was larger, which means that the stock may have lost the momentum for further gains. Let's take a look at the 15-minute chart of the stock. We can see that the stock had a large order transaction immediately after the market opened on September 18th, and then the stock price began to fall with a large trading volume. Then the stock price rebounded strongly and generated a large trading volume again. But the stock price rushed to $8.95 and then entered a slow decline mode. Until the close, the stock price had not rebounded significantly. Most of the trading volume on that day was concentrated above $8.17, which is more than 8% away from the current price, which means that no matter what the capital intends, it will become more difficult to push the stock price up again because it will face layers of resistance. In fact, the stock also has a large number of positions distributed between $4.82 and $5.94, which is the driving force behind the surge in stock prices. However, some funds seem to have flowed out of the market in this area. Is it the capital that drives the stock price up that has taken over the chips? This is not certain, but after the stock closed on September 18th, the positions in this area moved up a lot, indicating that a large amount of profitable capital cashed out and left the market. Of course, this does not mean that the stock price will return to this area, but it is very likely to fill the gap left after the stock price jumped up. As mentioned earlier, the stock has generated a lot of positions above $8.17, and if the stock price rises again, it will face greater resistance. So this makes the downward adjustment of the stock price more realistic. Of course, this does not mean that the short squeeze of the stock has ended. Even if the capital that drove the stock price up has been cashed out at a high level, the final result cannot be seen in one trading day, so I think the stock may be short squeezed again after filling the gap, and I set the target price at $6.80. Okay guys, this is my price prediction for Intuitive Machines stock. Thank you for watching. If you like my analysis, please click the subscription button and give a thumbs up. I will bring you more latest price predictions for hot stocks later. See you in the next video.